Hello, welcome. So I'm going to be going through trade breakdown using the fixed range volume profile for the week starting the previous week. Okay, so I'll call this A trade for the week starting 18th May to 23rd. As you can see, from 18th May to 23rd, so that's what we're going to be looking at. And I'm going to be showing you all the A trade. As you can see, I'm in one gold trade from this week open, and I'm going to be showing you how I take my trade. So I would want to waste your time. I'll just quickly, I don't want the video to be too long because it might be boring for you, but if it's not, then all good and fine. So what I will do is go through all trade. Okay, so I'll make this full screen. I hope you can see it actually. So, and let me get this out so that you can see. So usually what I do when I want to start a new week is to draw two volume profiles. One is the weekly. As you can see, this is the weekly, and then I draw one for the previous day. This is a top secret not many people talk about, and it's very important, and I'm going to tell you why in this video. So this is a weekly breakdown of all the A trade I took, and I'm just going to show you, and if you're planning to use volume profile for your trading, it's going to really help you. So what I do is I have two volume profile. For instance, if I'm looking for instance, today is Monday. This video might be out today. If you're seeing it today, let me know. But if we're looking to trade on Monday, we want to draw for the previous day, which is Friday. I'm using gold as I trade two pairs, gold and that's 100. So I'll take my fixed range volume profile and I'll draw from the start of the day to the end of that particular day. So I'll tell you from the beginning what I've noticed. With this. So let me just, I have a different color for the daily so that I know. So use previous day, so it has a different color. I know why I do that, so that I know which one is my weekly and which one is my daily. And as you can see, the settings, I'll make a different video for that. So now what I do is I mark out, for instance, I'm going to mark out what the higher volume, lower volume, and the place of consign, place of control. I call it place of consign, but a lot of people call it place of control, is on the chart. For this one, I'm going to reduce the opacity of the weekly because I don't want it overcrowding this particular one. So I'm just going to reduce the opacity since I have the lines already drawn out. I'm just going to reduce the opacity to about 7. Then I'll go on from there. So now that we have this, I'll now go down to the 5-15 minutes. Okay, I'll go down to the 5-15 minutes to take trades. Alright, so let me try and fix this. So I'll just go back to the 15 minutes chart. So this is the 15 minutes chart. Okay, I'm trying to fix this to work properly. Let me pause and get back to you. So yes, we're back, and I'll just scroll through and go to Monday. As you can see, the dark turquoise color one is for the weekly, while the other one is for the daily. So now we have this, and I'll just draw this out. Okay, so this is the range we are looking to trade off. Okay, let me just reduce this a bit and take this down a bit also. This is the trade we are looking to take our trade from. So I'll mark that. I'll just mark that. Usually I have already this set up already, so mark that. I hope this is not too long for you guys. So this is my daily low. Okay, so mark that out. So that's daily low. Then I'll do that for the eyes also. Okay, so we have the eye and the place of concern. I will also do that. Call that place of control. Okay, so we have that place of control. So now that we have that, so I'll go into the next day. So this is the day I want to trade off, right? So this is the day I want to trade off. Now that I have this, I'll just turn down the opacity so that I can see what I'm trading off. Okay, so going into Monday the 19th, I would have all this drawn out. As you can see, this is the high, this is the low, yeah, for the weekly. So that's one thing. So I already have drawn out for the week. That's this week we are in, which starts from the 26th, or should I say yes, 26th. Okay, so now what we are looking for is 2 things to make it a B and 3 things to make it an A++ trade. For instance, we want to look at the AMCD. As you can see, this would have been a good trade, but you'd have entered late up here on the 15 minutes. Okay, so what I like to do is to go to the 5 minutes. I'll go to the 5 minutes. It's better that way. And we move up from there. So be with me. I hope this is not too boring for you guys. I'm just trying to show you what the best trade should be. So this is Monday the 19th. Okay, so now this is where it gets interesting. Let's start from the top. Let's start from the top here. This is a value area low, which we can see here, and you can see the anchor VWAP is above it. Some would have taken it because, trust me, we had in lot of confluence. We had the divergence, bullish, bearish divergence. We had the cross just here. So this would have been a C trade if you just want to take it based on just this. But then look at what happened when it aligned. We had the bullish divergence, we had the cross, Okay, so you'd have taken it back to the value area low. From here, just putting your stop loss below that place, that value area low, extreme, that is an extreme low, so you just take it back for a 2-hour trade. That would have been the first trade here. So let me take that out. If we go on again, you would have seen it broke into the low, which I seriously don't like to take, but if I did take that, it would have come down at the end to win. But if you had asked me, I would have had just a single trade for that day and I would have been fine. Or if you'd have decided to take it here again, you would have won that trade also. Okay, this is also an A trade, so you have the push up, weekly VWAP, you broke back down, you take your trade after the cross, which happened here, your stop loss just above the eye, and I like to put it, as you can see, these are two parts. I like to put it, usually I don't set a stop loss, but I just monitor if it breaks above this eye, I'm out manually. But then you see, you just target the weekly zone low, so 2 trade and 2-1 trade for that day. We move on to Tuesday. Okay, and we can see this repeat itself over and over again. This would have been a perfect trade, because look at it, we had the VWAP at the top, which means we have to sell, right? We have this engulfing candle, we have the cross. If we are taking our trade here, targeting that low, so you can see the 3 things which I'm using here. We just target this low just about there. You can do a 2-hour trade, that would have won. So the 3 things I am using for this trade is the visible range, the fixed range volume profile as my first confirmation. It just shows where traders are buying and selling. 2, I have my weekly anchor VWAP, which helps me throughout the week to know mostly where the best direction is, the directional bias. And most importantly for me, to take my entry, I use my MACD. And if you want to add the divergence, you can. I'm going to show you in a different video how to do this with all these indicators together. Let's just move forward and let's go on. So this would have been another trade to buy. That is if you want to ignore, I call it, like I said, a C trade. If you want to ignore the anchor and you just want to go by the zones, all right, because this is a strong zone, this is a weekly zone, it's not a daily zone. You would have waited for this cross and you would have taken it back into the daily zone. Okay, what you'd have done, just taking it back there. But before we take the trade for Tuesday, we have to go back to the 1 hour. All right, we'll go back to the 1 hour and then we'll draw, because we don't need, obviously we don't need this. Now we are done for Monday. Now we are going to draw for Monday. So we'll draw from Monday. Since we are going into Tuesday, we'll draw from Monday to the end of that day. Once again, I'm going to change that so that I know it is for previous day. Once again, I'm going to mark it, but instead of marking it over and over, I'll just move this, since that simply means previous day. And this also move it to my place of focus, consign, control, any which way you want to name it. Then I'll go back to the 5 minutes and I'll be ready to take trade for Tuesday. Let me scroll down. If you want me to keep doing this, let me know, and I would keep doing this. As you can see, we entered a low volume for Tuesday, but I already showed you these 2 trades. We would have taken this first one, the second one, and check out this second trade, or on the first one, which touched properly the zone. If we are taking that, putting our stop loss just below this and targeting this high, would have had a 4-hour trade, as you can see, and that trade would have won. We had chance to take a second entry here. I would have had 2 winning trades just that morning and would have been done. And dusted for Tuesday, the 20th of May. Wednesday we'll do same thing. We'll follow it just like that. The cocoa of the bread and butter of the strategy is to ensure you have your daily zone, because there are times the weekly zone, there are times the daily zone have that big fall off where it has to come to the weekly volume profile, then start bouncing back. You have confidence of taking that trade also. So you see, this is where I would have cashed out this trade, make my weekly fair value graph low. This is where I would have cashed out that trade and I would have been cool and good for the day. If you enjoyed this video and you want me to do more like this and you're not bothered about how long this video goes, let me know and I will definitely keep producing such videos. Let's go to Wednesday. Okay, so for Wednesday we want to draw from Tuesday the fixed range volume profile for Tuesday. If we want for Wednesday, right? So we want to trade on Wednesday, we have to draw the fixed range volume profile, as you can see. So this is it. So we would have traded Wednesday here, and looking at it, you should have seen your weekly trade go in. For Thursday, we'll draw from Wednesday. Right, so we'll draw from Wednesday here to this high. Okay, so you can see we had it there and would have traded from the highs to the low, and you can see, okay, this is good. Thursday, let's quickly go into Thursday. I want to quickly show you an A++ trade. So let's go into the 5-minute chart and I'll show you an A++ trade. This trade I'm in now for gold is an A++ trade. Why? We had the weekly extreme zone and we had the normal weekly zone, which is the gap. And now let's go to Thursday, which I talked about, and I will show you this repeating itself again. So this is Wednesday the 21st. So we want Thursday, right? Good. This is Thursday. We are trading for Thursday. Now guys, take a look at this. Are you seeing where the VWAP is? This is the VWAP. It's below price. We had it come here for the first trade. This is an A+ trade. Trust me, this is a typical A+ trade. So it came down to the previous day volume profile low, would have taken a buy back to the place of control, which funny enough matched the daily place of control and the weekly place of control. So let's take that first trade. Okay, so we had it here. So would have taken that first trade here, just placing the low here and taking it back to this point. So that is a 1.5 hour trade. Yes, and would have been done with that trade. But then what happened again? We have multiple plays of control conflicts, but no, this is a B trade. This will be a B trade. Yes, you have two confluences, weekly POC and daily POC. Yeah, so this would be, if you ask me, this would be a B trade, which you can see we did not have a lot of room to ride, but we did ride any which way. So if we take it on the cross of the MACD, this first trade, targeting that last high, this is what we would have gotten. So this would have been your first take profit, 1.37. Then you move to break even and you target the weekly. So we would have had a 2-hour trade, just like that. But then see what happened. We would have been in one trade, right? We now had a bearish divergence on this. So this is where I would have taken my second entry, which is a B trade also. Okay, this is a B trade, so I would have taken that. Once again, just putting our stop loss just beneath the low. Like I say, I usually my trade, I don't put the numbers for the stop loss. I just watch it with my eyes so that I don't get a wicks and then a reversal. So now you take it back. Your first take profit will be a 3-hour on this, and if you aim for the second one, which would have been a 4.5. Sweet trade, good trade, but that is not the trade I was talking about. Now look at an A trade. This is a perfect A trade. We broke down on the daily fixed range low, and we also touched the weekly fixed volume profile low, and we had the cross just here, which if you are taking, you can see you would have been close to this gap, which would not have been a very good R, right? But if you took it any which way, trust me, this trade, I can guarantee you, if we took this trade just here, you can see if you use the automatic stop loss, you'd have been stopped out. But if you put the stop loss just below the weekly range, you would have still be into this trade, but a lot of load. So you can see the risk is not that good on this. But then what happened when it came back down was the interesting part. We had another A plus, not A plus plus trade here, and then we would have taken it on this candle, targeting that low again. And if we move forward, you can see what then happened. If you have had your first take profit here, this would have been a 1.3. all right, it would have been a 1.3. so you would have had these two trade winning in same day. In fact, the first trade was for 1450 and the second trade was for 18, and would have had the take profit around this point. Or if you even waited for this, that would have been on the next day, the early hours of the next day. So that is a good A plus trade. What happened the next day after? We had another A plus trade, which we would have taken TP1 here, moving stop loss, take break even, and would have aimed for the stop, which we got. So that's how I set up and take my trade. This is me just showing you what happened last week. So if you want to be seeing more of this, let me know, drop it down in the comment, and I'll keep doing this for you guys. I'm not, as you can check my description, no sponsors. I'm just a guy showing you my own trade and teaching you how to use this. I'm not hiding anything. The forex market, the gain is too much for one man to eat alone, so I'm not saying you should give me anything. All I'm requesting is support the channel. There will be a PayPal link if you use Revolt. If you want to support the channel, just let me know in the comments, and you see the email. You can send your donation, even if it's $1. I'm not asking for much, okay? If you enjoyed the video, if you like the video, if you're hitting the like button, your $1 donation means a lot to me, okay? It means a lot to me. I'm not asking for $2. I'm just asking for $1, okay? Just to support the channel, and this will remain free. I'm going to make another video showing you how I plot my weekly fixed range volume profile, preparation for the next week, and how I take my daily trade. Like I say, if you want to be in this trade with me, you are free to do so. This is a trade I'm in. As you can see, this is a trade I'm in. We had two conflicts from the weekly extreme zone, the weekly fair value zone, and trust me, if we go back and draw our daily previous day fixed range, okay, our previous day fixed range, okay, you would see we still add that extra confluence at the top again, and that was why I said yes, this is the trade, and I took it. As you can see, first take profit would have already hit here. I'm looking to write it down, okay, looking to write it down to the spot. All right, this will be a good spot. As you can see, this trade already is a 3-hour trade. We already had one part taken out. Move your stop loss to break even. If you had done that here, it would have stopped you out, but you would have had a chance again to come in to the market here to take it down again, because this is a place of control for the previous day, right? And it matches this also, so you'd have had the chance to take it back down again, taking another fair value trade out of it, bringing down your take profit. If you want to see more videos like this, let me know, and trust me, I'm going to be doing more of this. I'll see you on the next video where I show you how to draw the weekly zone properly, the top secret. You don't want to miss that. Stay blessed. See you on the next one.